Hey guys, welcome to the Investor's Guide to Memphis Real Estate. I'm Dean Harris. As always, I'm with Douglas Skipworth. How are you?
Doing great.
That's great, man. You can catch all of our information there on the bottom. Douglas and I are here to bring you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis. Please like and subscribe to our YouTube channels and all the other pages and likes and clicks and all the other stuff that you can do. We would really appreciate that. Show sponsors are listed on your screen. We wouldn't be able to do this without their support. We really, really, really value those partnerships that we have with those guys. Weekly Zoom calls, I'm still doing those. Email me, Dean@CrestCore.com, if you want to get on that list. And I help buyers and sellers every day. One of the things that we focus on here is not telling you about me being an agent and how I can help you, but I always want to mention it that we are making offers for clients. We list property for clients every day. So please let me know if I can help you with that, Dean@CrestCore.com. We have deals of the week. I'm going to start adding this back in. When I first started doing the podcast, it was a live radio show.
The radio, I was going to say the radio show.
Yeah, and then COVID kind of had a switch. But on the radio, we had a deal of the week. And I'm going to begin to do that with all of my listings. I'm going to pick, just something out there it's a great deal for the week. I'm going to start it this week, but I'm not going to have one. I have 50. I've got BRRRRs. I have BRRRR properties. I have them everywhere. I've got probably 50 of them. Some are better than others. Some are 100% BRRRR. Some might be partial. But what an excellent segue into today's podcast. Great. We're talking about why we're BRRRRing right now.
Yes.
Why is that strategy super popular right now? Why all of a sudden am I inundated with all of these listings? And there's a simple solution to that.
Yeah.
Simple answer. I have a client, a institutional property owner, investor that bought too many properties that were vacant. And when the interest rates hiked up, they stopped buying and said, hey, let's see what we've got. Like everybody did. Everybody stopped and said, hey, let's assess what we have.
Yep.
They realized that they had a ton of vacant properties that needed some rehab of some kind. Okay. I don't know how much, they didn't know how much at the time. So they go out to the first few, they needed X amount of rehab. Let's sell those. Really bad shape. Let's get rid of them. Okay. Did that. Then we came to another section and it's like, wow, these have been sitting there long. So this kept going. Now we're in this situation to where we are liquidating and moving vacant properties that need a full rehab. So with that, we've got opportunity
for somebody. Ding, ding, ding.
Opportunity galore to talk about the buyer to
who's
get into a BRRRR.
The BRRRR.
And if you and I have talked about this in the past, if clients come in and they ask me, I had another one email me yesterday, hey, I got 30 grand. What do I do? So my first suggestion is not to BRRRR. Now, if you got the stomach and you're seasoned and you know what's going on, let's get down. I'm ready to go. I'm comfortable with it. We've talked about this several times. But if you're not super comfortable or super seasoned, maybe the play is to come in and let's buy a home that's occupied, cash flowing. We were just talking to our producer about this before we started. That might be a pattern for him and for others. We have stressed this. I have stressed this. That's the answer I give every single time when someone asks me what to do.
Run a couple 5Ks before you sign up for the marathon.
Yeah, no need to start with the Boston Marathon.
No.
Run some 5Ks, get comfortable, and then you can hit, the big prize. And to me, the big prize is the BRRRR.
The big prize is the BRRRR. Everybody wants to own real estate. Everybody wants to own rental property. And we've talked about this before. It's ideal. Yeah. It's income producing. It's depreciation. Yes. It's equity. Ding, ding, ding. Big equity, time. Appreciation, and leverage. Ding, ding, ding. Yeah. And so I think what is so attractive about BRRRR is the equity and the leverage.
Big time.
Right? You can have, we've talked about this before, that turnkey, turnkey is a good product. It's a full price product.
Yep.
You pay full market price.
It's a good one.
It's a good one, but you pay full price.
Yep.
If you're looking for a discount, you buy BRRRR properties.
That's right.
And so that is, I think that's, some people buy new cars right off. Some people like a pre-owned low mileage car.
That's right.
And that's what the BRRRR strategy is.
That's right. And for those of you, we keep saying BRRRR, it's B and 4 R's: buy, rehab, rent, refinance, and repeat.
There it
so
is.
It's we didn't create this. This is, I think, maybe go back to bigger pockets. But I mean,
Who coined the term? But as far as this strategy,
been here forever.
Yeah, I mean, has been here for decades, if not centuries.
Why I prefer this product? There's a couple of different reasons, some external reasons and some internal. Some internal, I know when I'm buying the property, I see it's in terrible shape. I want it in bad shape.
Yes.
Because I want to have control. And here's what I mean by that.
Okay.
Control and knowledge. If I go in and
like
BR.R.R.,
yep,
I know this property inside and out, and here's why I do that. I have a rehab guy that goes through everything. Okay, general contractor goes through all of it, all the major mechanicals, all the cosmetic and small items. I know everything that's there. Some things might not need to be fixed or rehab, and some things do. But when I finally refinance that home and I essentially close on it, right? You're buying it and you own it, but closing on the investment property, meaning I've transformed it into what I want it to look like. I have full knowledge of that house. There's a tenant that my property management company just placed. I know everything about what I fixed and what I didn't fix. Yep. I know the lifespan of the new items and then the old ones because I know the age of everything. And I have a better understanding of my investment property. Now, if I go buy a property like we've talked about, that's either turnkey, you feel a little safer with that, or just an occupied cash flowing property. You're in the dark.
You're in the dark.
You don't realize
you can get an inspection and you're like, how old's the roof? How old's HVAC? How old's the water heater? Do these kitchen need to be updated? Does the bathroom need to be updated?
But you're in the dark.
But you're in the dark.
And you can turn the light on there, but you might not like what you see, right? Tenant moves out and you got way more rehab. So I have moved away from me personally buying occupied cash flowing homes. You know, a lot of people say, hey, they've been there for forever. The tenant's been there for 5 years. That's horrible news.
That's a lot of work that needs to be done.
That's horrible news. So to me, going back to the BR.R.R., I understand the condition. I understand everything about the property.
Yes.
Right? There's the one main reason. Here's another.
Okay, go ahead. I was going to say, well, to me, that's awesome.
Yeah.
Getting that knowledge. But what you're able to do with the BR.R.R. is all that rehab is you're able to finance that rehab.
All of it.
As opposed to what you just described of an occupied property that, hey, everything's working great. They're paying rent. And you put it on a fully amortized or some type of note, a long-term note.
You're 25% down.
25% down, you put it on a note, and then 6 months in, the HVAC goes out.
Yeah.
And that's going to cost you $5,000. Or you need to replace the roof or water heater. Or they move out and you have to do a $20,000 rehab because they've been in there. And all of a sudden you have to come out of pocket for that versus doing it on the front end where you can borrow or put down money initially on a short-term basis, do the rehab, and take that full lump sum and amortize it out over a longer period of time. That, to me, is why I think of the big equity and the leverage part of why the BR.R.R. is so good. Knowledge is power.
Absolutely. And knowing that the rate is high now, people are asking me, like, what are you doing about the rate? Hey, I'm moving forward. I'm telling you this, I'm getting deals. I would much rather, here's the decision I made in my head. I would much rather pay a higher rate now and a lower price on the house.
Yes.
And when that rate, refi. No one believes me.
A lower rate and a higher price house?
Yes.
Yeah.
No, I'm not going to say no one. I have several people that have challenged me on that. I was like, you ought to look at the last one I just bought. I'm not making any money on it. I mean, I put mine on lower years, but I'm making no money because the rate is at 8 or 7.5, whatever the rate was when I signed. I don't care. It's a great house in a great area that I BR.R.R.ed. It's a complete rehab on it. And it got a great rental in a great market.
Yes.
Am I going to make a ton of money this first year? No. Second year, probably not. Whenever this rate goes back to the 5.5 floating range, because it'll get down there. It's not going to go back to 3, folks, but it'll get in that 5 to 6 range. I'll just take whichever ones that I've bought then and refinance.
Yes. Because you are a real estate investor, not a real estate flipper. So you're not looking short term.
No.
So you don't, it's kind of like the stock market, like, hey, the best thing, like a Warren Buffett will be like, man, when he invests in a company, I have seen him like in the sense of like, he doesn't care if he doesn't know what happens for 10 years. Because he's not making a short-term investment. He's making a long-term investment. And that's what you're talking about. Because what we're going to have, don't know what's going to happen to rates over the next 3 months.
No.
But without a crystal ball, the plan, what they're saying is that with the demand that's coming and the low inventory we have now, that the prices will continue to appreciate over the long term.
Yes.
And rates will probably come back down.
And what?
You're not going to have. So you're going to be back in the scenario you described of, you can buy, the rates are lower, but the prices are higher. So would you rather buy a lower price here with a higher rate and then refinance here?
This is so powerful what you're saying, because it's exactly what I'm forecasting for myself. I'm trying to explain this to other buyers. That's what I'm forecasting for myself.
I've done some research on this. I know we've talked about this and have plans to talk more about it, but the millennials who are about to start buying first-time homes, they are more comfortable. You've talked about this with higher rates because they've never had lower rates.
They don't know what 4 is.
And so when they start this home buying, the demand, the inventory is so low, the prices will continue to increase. It's going to be hard to buy. Eventually, sellers will start selling again when rates come down, because sellers can move. Because a lot of people are holding on. They don't want to move, so they're not selling. So the demand and the supply, it's just a funky time. That dam is going to break in the future.
Oh, it's going to break. And when the rates start going down, everyone's going to be paying attention. Prices are going to, when they list, they're going, the rate's down to 1.5. The prices are going to go back up. Here I am. I'm going to be over here. And this time I bought 10, 12, 14 or so maybe by the time this is over with a rate I don't like.
Yeah.
And then as soon as that happens and it comes down, boom, I'm going to refi. I have my houses.
And I'm going to refi the rate I want. What you're describing, and I hadn't thought about this, you're basically, this is air quotes here, you're basically doing a hard money loan for 2 years.
You got that right. With my
Instead
banks.
of 6 months, you're going to make it 2 years, and then you're going to do it long term, because it's just a fact. It's just a cost of doing business.
It is right now.
For the long term.
Yeah, because what other option is there? I'm going to sit here and not buy anything
miss all
these low-priced homes?
And that you're going to look up in 2 years from now when those prices, you're not going to be able to, you can do like I did and look back and go, man, I didn't.
Why didn't I buy 20?
I didn't factor in appreciation 15 years ago when I was so buying property that I just never thought it would appreciate.
No. And it is going to, and the rates are going to come down and prices are going to go up. This is another one of these. I should wear, most of the listeners won't know, but Johnny Carson.
Yes.
What was the character name? He used to wave the thing and he'd touch
Karnak or something. He's hilarious.
He would touch it.
Yeah.
Well, if you're anything like that, I'm touching my forehead now and I'm telling you, rates are going to come down and prices are going to go back up, and you're going to wish you had bought some rental properties during this time. And worst case scenario, well, Dean, what if I buy them and the rate doesn't go down? Well, then we can sell them. There's people buying rental property every day. I sold 38 of them last month. There's a ton of these being sold.
And again, the economics or the demographics, this from National Association of Realtors and all their home data, because realtors are people, owner occupant homes. We've talked about this on the show. That's where the crash was in as far as the transaction volume. Prices have stayed the same because nobody's moving, and inventory is very low. So the demand it's just a tight market. But once that breaks, and the millennials start buying and others start buying, it's just going to drive up. They expect 2024, the home price, to another 500,000 homes being sold, which is about 10% more. And then the next year, another 10% more, which will be, so they think 2025 is going to be as big of a year as it's ever been for buying homes. Yes. Which just means, we all know when that happens, that means that's demand. That means appreciation. That means
prices are
going up.
If they're going up, rent will go up a little bit. Prices will go up. That's what I'm trying to preach now.
It's still a good time. So anyway, that's why
that's our next podcast is why we're buying. Why we're buying now. So all right, the other thing, last thing before we wrap up the BRRRR strategy part of it. Reliable contractor, or there's 2 more points.
Hey, one thing we skipped when you were talking about why BRRRR is so good and why you love it.
Yeah.
Tell me why, because I've heard you say this before. Tell me why your banks love it.
Yes. So that was there's 2 points. So my bankers love this for the same reason I love it. If you're a banker and I'm turning the tables over and I'm going to loan money to this person, if they come to me with a home that's occupied, cash flowing, good tenant, they want to put 25% down, I'm not nearly as enthusiastic about that loan. You might think, what you're getting 20% down. And it's in a volatile market. Things go up and down. This person, they got 1 or 2. They don't like that loan nearly as much. If I come to them and I say, hey, I'm going to borrow your money to buy this house. I'm going to borrow your money and completely renovate it. I'm going to fix everything in the home. I'm going to make sure that all the major mechanicals are up to date or at least within a few years old or brand new. I'm going to do the floors and I'm going to tell them the whole bit of it. And because they have to plan for me to default. That's a banker's mentality.
Sure.
When they underwrite a loan, they have to say, well, wonder if he doesn't pay. Well, if I don't pay, Mr. Banker, I have likely more than 20% equity in it, likely, and it's completely redone. You don't have a smashed up house that you can't sell and can't move to anybody. You've got a home that's been freshly renovated. You've got a tenant that's in there paying rent. If I default on my loans, take it. You'll have probably 60 to 70% only in it, 30 to 40% equity in it. Take it and move it quickly. Someone will pick that up right away. Yeah. Likely someone on your banker's list right now.
They love it.
Because you know what I'm doing. I'm telling them right now, hey, if anybody comes in and drops the bag of keys on the floor on the ground like they did in 2008 and 9, please call me because I'm here to buy investment deals. So my banker loves it. I've heard both of them tell me it is so much easier for them to go to their board and get approval for what I'm doing.
Loan committee loves it.
Because of this
Loan
strategy.
committee loves it.
So my bank loves it. The last one here on the BR.R.R.R is the reliable contracting part of this. Is huge.
Yeah.
I have spent years and years and years in this business selling this product. I have gone through contractors like you wouldn't believe. And recently, the last couple of years, we have found a couple of different companies. CrestCore can do this work.
Yes.
Odyssey Construction can do this work. And then I have some other chuck in a truck guys if it's some small, just fix up things that don't require licensing. So the biggest part of that is the construction piece. We have found reliable, trustworthy construction. And we've talked about this, and I say it every time. Contractor triangle, speed, price, and quality. You can't have all three. The ones we have found and partner with are speed and quality. I've been willing to pay a little bit more. And just about every investor I talk to is willing to pay a little bit more to ensure a great job and on-time job. Right. So the contracting part is the biggest piece.
Okay. It's the choke point. It's the single point of figure. And it's the biggest where the variability of the BR.R.R.R strategy can come into play. Because you know what your purchase price is. You're pretty much for sure on what your rent is. Plus you're not talking $100 plus or minus.
No.
So this is where you could get into thousands of dollars of difference if you mess up on getting the wrong contractor, the wrong scope, the wrong bid on the initial. And if somebody who doesn't know what they're doing, they go in and kind of botch it up, and you have to repair it or fix what they've messed up. So amen. High quality,
construction
again, whether
is the way to do it. Okay, BR.R.R., I want to tell you guys this before we go. I usually don't do a ton of self-promotion, but I am with this. I have got a ton of BR.R.R listings, properties that need rehab. I'm going to have more. I'm listing 40 more tomorrow.
Awesome.
That's going to put me about 130 active listings. 50, 60 of those are properties that need to be BR.R.R'. There is a property for you. Email me, dean@crestcore.com. If you want to BR.R.R., let's get a discussion. I have these weekly Zoom calls you can come in and listen to. There's 100 different ways that you can get engaged with us and find out what's going on. So I do have these BR.R.R s. I'm rapid. This is the reason why we're talking about this. It's the reason why, when we met yesterday, we always go through our topics and we go through, we have a list of topics and we just try to pick out what's relevant at this moment. The BR.R.R stuck out to me so bad. It's the only thing that is happening. Not only, it is 85% of what's happening right now.
Yeah. And one thing we said, the competition is low.
There are not many buyers that are buying.
So now and it's going to become more, I'm not going to say a frenzy, but it's going to become more competitive. So take advantage of this opportunity with these BR.R.R s and do it.
And please don't come to me with the interest rate. Please don't come to me. I just sat here and told you about the interest rate. Please don't hit me up with the interest rate. Hey, we'd love to do it, but the interest rate, I'm not going to have that conversation with you. I just had it. Don't worry about the rate. We're buying investment properties to invest in the long term. You're going to marry this house. You're going to date the rate.
Yeah, man, that's so good.
That's great.
That's so good.
Appreciate you guys tuning in today. If you have any questions, Dean at CrestCore.com. We'll see you next time.
Yeah.
All right.